Hey Tax Goddess community, we are on a mission here to hit 100,000 subscribers, but we need your help. What we've noticed is right now about 81% of you are watching our videos, but you're not subscribed. If you're enjoying the content and finding value in it, please hitting the subscribe button would make a huge difference in our channel. It would help us grow and reach more people who desperately need our tax strategies to keep their money in their pocket, just like you guys. So it only takes a click and it continues to help us bring more of the content that you love. Plus, of course, don't forget to like and share for anyone that could benefit from the tips that we provide. Thanks so much for being a part of the journey with us. Hey guys, Shauna the Tax Goddess here. Today I want to cover the SALT cap, the state and local tax cap. Now, a while back, there was no limit at all on state and local tax deductions, which basically any taxes that you paid at the state and local level, you were able to deduct those as an itemized deduction at the federal level. So if you were in a high state tax, right? So New York, New Jersey, Pennsylvania, California, if you were in any of the states with a really high state tax, you were historically able to deduct the entire thing in your itemized deductions. Now, a law came in and capped that at $10,000. And one of the things that I'm in love with the new BBB, the big, beautiful bill, is that they removed the $10,000 cap. It is gone, finito, out the door, depending on your income. As usual, big asterisks, changes in the tax law based on income, which always throws people for a loop. And so I wanted to deep dive on that a little bit today because I've seen quite a lot of videos saying the new SALT cap is $40,000. It's absolutely $40,000. Nothing is absolute in the eyes of the tax world. The answer to everything in the tax world is it depends, right? And you guys know that I teach you the truth, not what you want to hear in the TikTok videos or YouTube videos or whatever it is, right? I am all about the truth, all about the details. So now let me explain. The new $40,000 cap, okay, is based on a phase out of your modified adjusted gross income. If your modified adjusted gross income is more than $500,000 for joint filers, okay. Now, this makes, in my opinion, the pass-through entity tax, PTET, even more important than ever, because not only the new law did not change the ability, thank goodness it did not remove the pass-through entity tax deduction, which basically allows your business to pay your state and local taxes on your behalf, which is awesome. So this is still a legal loophole that not many CPAs are doing for their clients. So if you're paying high state taxes, definitely make sure you're talking to your tax preparer to get that PTE election done for you, okay? But the nature of this increase, this $40,000 SALT cap, is set to revert back to $10,000 in 2029. Okay, so this is really like a 5-year, it works for 25, 26, 27, 28, 29. Okay, 5 years. You want to take as much advantage of this as possible, especially if you're in one of those higher tax states. Than anywhere else, right? If you live in Florida, Texas, stop watching this video. You don't need it. You don't have state tax, okay? So I wanted to just run through some of the specific numbers for you, okay? So you guys have the details. So historically, it was set to expire January 1st, 2026, the $10,000 SALT cap. So what they changed it to was, instead of just allowing all the deductions, they did put a $40,000 cap on it. So instead of a flat 10 or 5,000 if you were married filing separately, the deduction is now an applicable limitation amount, okay? And that's where that MAGI, the modified adjusted gross income, comes in. So for taxable years beginning in 2025, so this year, the applicable limitation amount is $40,000. And what you're applying that limitation to, okay, so I'm going to read it word for word for you here. For taxable years, okay, the applicable limitation amount will be reduced by 30% of the excess, if any, of the taxpayer's MAGI, modified adjusted gross income, over the specific threshold amount, which is that $500,000 for married filing joint. So if your taxable income, MAGI, is, let's say, $1 million, right? Your ability to reduce this $40,000 is going to come down by 30% of the excess over the 500,000. So if you're at $1 million, right, the excess is 500,000. 30% of that is $150,000. You really won't get any deduction. Okay. Now, there is a baseline. That reduction cannot take you lower than $10,000. So at least it doesn't go to zero, which is great, but it's still back at 10. So although I would have loved to see the BBB, the big beautiful bill, just remove all these limits in the first place and go back to the way we had it, where you could deduct all of your taxes. If you paid $2 million in tax, then you get a $2 million federal deduction, itemized deduction. But they didn't do it. It is what it is. Now, commentary here, again, this is supposed to expire at the end of 2029, December 31st, 2029. So I don't think we're going to see any changes in the next 5 years. Maybe, who knows with politics. But I think for the next 5 years, your job is going to be to try to keep your modified adjusted gross income, your MAGI, below the $500,000 threshold. And how do you do that? You call a tax strategist. It is our job to make you look poor, right? To reduce your MAGI, reduce your AGI, reduce your taxable income, get those as low as possible so that you get to be able to deduct as much of this as you can. Okay, so if your CPA has not talked to you about the new SALT limit, if they've not talked to you about the PTE, the pass-through entity tax, because that's still a great legal loophole to get around this whole thing, okay? If they've not talked to you about those two and your income is over that $500,000 limit, you need a tax strategist on the team, okay? So this is what we do. So if you have questions, if you're looking for ways to reduce your MAGI to less than 500,000, reach out to us, okay? As usual, tax strategy is not a set it and forget it. There are many things that you can repeat year after year after year, but when there's a major tax bill change like this one, you really need somebody who is on top of all the changes and who knows the loopholes and who knows how to use which strategy and when to be able to get you the best outcome. So if you are looking for a tax strategy team, if you're looking to create your own $1 million tax blueprint with our strategic tax coaching program, reach out. TaxGoddess.com. This is what we do all day. So let us help you get down to our average of 6.92% in taxes and keep as much of the SALT deduction as you possibly can. All right, we'll talk to you soon. Have a great day, y'all. Bye.